Hello traders, welcome to this video. In this particular video we are going to be discussing the bear flag chart pattern. So basically a bear flag is a continuation pattern that signals the potential for a continued downtrend after a brief upward correction or consolidation in price. So now here's how to break it down and identify it quickly on a chart. We're going to be looking at how to identify the bear flag pattern. So one thing for you to know is that the bear flag candlestick or the bear flag chart pattern consists of a flag pole and a flag, right? Now the flag pole is the initial sharp and steep downward move, as we can see here. This is called the flagpole, the initial sharp and steep downward move that precedes the formation of the flag. It represents the strong selling pressure. Now, this shows us that there was strong selling pressure. Now, the flag, which is the second component of the flag bearish flag chart pattern, the flag occurs right after the drop. The price consolidates or retraces upward in a parallel channel or slightly upward sloping range, as we can see here. You can see that it's slightly upward sloping, right? Before this happened. So we can see this is the flag. This is the flag, right? It occurs right after the drop. And then this movement, this consolidation that we can see here creates the flag. It's often a pause in the market before the next leg down. You can see that right after the flag formed, the bearish move continued. So now, how do you spot a bear flag? The first step is to identify the flag pole. You have to look for a sharp downward move in price, as this sets the stage for the pattern, because without this we have no flag. Now this is the first thing to identify, right? And then the second step is to watch for consolidation, because right after the drop you can see that there's going to be a consolidation or upward retracement. It might not exactly be at this angle. The consolidation might not exactly be at this angle, but there's going to be a consolidation. Perhaps it could be tilted upwards a little, or it could be a close to sideways consolidation, right? And then the price will often form a channel or small corrective upward movement, just like we can see here. Yeah, it's going to be in a channel, just like how you can see that price was trading inside this channel, right? Then the third step is to confirm the breakout. Once the price breaks out below the flag, it has to be below. If it breaks out upwards, the pattern no longer holds, right? It has to be a downward breakout. As we can see here, this was more like a false breakout, but eventually we can see that the price broke out of the flag downwards, right? Broke out of the flag downwards, as this confirms the continuation of the downtrend, right? Confirms the continuation of the downtrend. Although we can say this was initially a false breakout, but eventually the breakout was valid, because after the breakout happened, the price retraced up a bit. It did not get to the upper part of the channel, and then the downward move continued. So that is how to identify the bear flag. Now basically the bear flag tells you that the market is likely to continue its previous downward trend after the temporary pause. Initially, this was a downward move, right? This was a downward trend, and then there was a pause. Perhaps there was some struggle between the bears and the bulls, but then whenever you spot this pattern and there happens to be a breakout, then you know that the sell trend is likely continuing, just like we can see here. The flag part is typically a weaker upward move compared to the strong downward flagpole. You can see that this was the initial flagpole, and this is the downward flagpole that occurs right after the consolidation. And once the pattern completes, traders expect, just like how it happened here, once this consolidation completes and there is a breakout, once there is a breakout, traders usually expect another leg down, just like this. after the breakout occurs, traders usually expect another leg down, right? So if you want to spell a bear flag on any chart, just note that the first thing to identify is a strong downward trend, followed by a corrective upward move. Perhaps it could be tilted to the upside a little, that forms the flag. And then when the price breaks down out of the consolidation, this is your entry signal for a short position, right? So we would have considered entering right after this first breakout. We would have considered entering a sell trade here, and then your stop loss can just be above the channel, right? Above the channel, because we are working with this pattern. Yeah, we are working with this pattern, so our stop loss has to be above the channel. And then as for our take profit, we can consider using the nearest support level. Yeah, the nearest support level can be our take profit. So after the breakout happens, you enter your sell, you set your stop loss above the channel, and your take profit could be at the nearest support level. So basically, this is how the bearish flag pattern works. So I hope you found this video insightful. Kindly like, subscribe, click on the notification bell so you can get updated on more videos for more trading insights. Cheers guys, and happy trading.